Hey guys, what's up? Welcome back. This is Neo. Today we talk about SoFi Technologies. Right now the market looks like it may be still in a little bit of high volatility. Some companies may be trying to find the bottoms right now. From my past experience, most likely stock bottoms by the time the next earning reports arrive. So the reason being, a lot of AI disruption in a lot of different industries, and we still need a little bit of more time to gauge the disruption, if any, if at all, to any companies that investors invest in. Last quarter, we have seen some company with continued business expansion and profitability. One quick example is SoFi Technologies. And then there are many other companies which are seemingly benefiting from the AI adoption, especially with agentic AI. But still, the market is being cautious because something new, some disruptive technology is coming to the market and could potentially either interfere or take over the business of legacy companies in their own industries. For example, today we are talking about banking. In this episode, I'm talking about banking and especially how AI could disrupt the business model of legacy banks such as Wells Fargo, such as Bank of America, and such as Citibank and HSBC. The ones who adopt to AI and integrate it seamlessly will find unlimited and unfound profitabilities in the future, in coming years. Okay, let's dive in, people. Today, we have a little bit of great news. Anthony Noto, CEO of SoFi Technologies, bought equivalent to $1 million USD worth of stock of SoFi Technologies. So that is about 56,000 shares, as we can see here, 56,000 shares. SoFi Technologies CEO Anthony Noto purchased 56,000 shares of company stock in an open market transaction valued at approximately $1 million on March 2nd, 2026. So his price range was about $17.50 to $18.21 per share, and the average came to $17.88 per share. Not bad. Is it the bottom? Now, in my opinion, and in my 27 years of experience gauging the stock markets, there is actually higher uncertainty now, as we know the shipment of oil out of the Middle East region has just been disrupted. So with that shipment disruption and the limited supplies of oil domestically for United States, we should expect increasing prices for crude oil, which in turn increase all kinds of all the prices for all kinds of goods and services for United States and overseas countries. Why? Because it increases oil is very important for transportation. So you hop on an Uber, right? Most of the Ubers, they are still using ICE car, internal combustion engine, ICE cars. And if crude oil's prices increase, gas prices increase at the pumps, and those drivers will have to forward those higher costs to the riders or the consumers. Likewise, the truck which shipped the goods to local Walmarts, local Safeway supermarkets, for example, will see higher cost of transportation as well when the crude oil prices are higher. Then diesel prices will be higher, and they have to pass those higher costs to consumers, right? By increasing prices at retail levels. So those are added uncertainties for now. And because the Supreme Court is also trying to overthrow or reverse the previous tariffs that we have levied from other country since last year, there is some uncertainty as to how we can repay those impact countries or impact businesses. So there are some uncertainties there. And then there is some uncertainty as to the new chairperson of the Federal Reserve Bank will be viewing the state of our economy and how he may think should we have more rate cuts or fewer rate cuts, etc., etc. So there are still lingering uncertainties as of now. So do I think that the stocks are trying to bottom now? Not quite yet. But for sure, some stocks, especially SoFi Technologies and other stocks, their valuations are already at a discount compared to their net present value of future cash flows and business expansion. SoFi Technologies, according to my valuation model for cash flow, right now should be valued at around $28 to $33 per share, depending on which percentage I use for my discount model. If we are talking about PE ratio model, SoFi is worth roughly $34 to $35 per share as of now. However, with all these major uncertainties, we are now at a risk of situation for most institutional investors and traders, and also retail investors and traders alike too. So that's where the state of our stock markets is at right now. But Anthony Noto, as the CEO, as the driver of the company, if you will, the driver of the car, right? Only the driver knows where to go and where he is trying to go to with his target destination in mind, right? So Anthony Noto see the opportunity and grab this discount share price and start purchasing shares of SoFi Technologies. This is a beginning good sign. It always is. When the CEO, CFO, high-ranking executive of a company start buying the company shares, it's always a good sign. But not the only sign, okay, that we need. So he bought 56,000 shares, which is wonderful. Not 500 shares, not 1,000 shares, 56,000 shares. Transaction day, March 2nd, 2026. And see, the stock prices have fallen about 43% from its all-time high at around $32 to $33 per share, if you remember, right? So Anthony Noto now has more than 11 million shares of SoFi, which is crazy. The significance of this implication is open market purchases where executives use their own money rather than receiving shares and compensations are often seen by investors as a positive signal of management confidence. See? All right, and let's move on to the next one. So guys, regardless if CEO of a company purchase the shares of the companies or not, there are other factors we need to take a really deep dive into and see if such company is a beneficiary of the current AI disruption. Now, what we are going to discuss is agentic AI and how it may affect the banking and finance industry, specifically the industry which SoFi is trying to disrupt. Or is SoFi being disrupted by agentic AI? Now, let's look at who could be the beneficiaries of such AI craze or AI development. Now, this creates a shift from traditional legacy banking infrastructure, which are different layers, different vertical layers, and different horizontal departments and divisions of a bank or a financial institution, which there are always frictions between the layers and between the divisions as well. So in order for one department of a bank to communicate with another department of a bank, for example, you walk inside a bank to discuss a personal loan or small business loan, what do you have to do? Do you just walk in? No, you call the local bank, you call them, make an appointment, and then the local bank, that personnel will contact the corresponding loan department of the bigger corporation at a higher different level. So there is already a layer to go through and then talk to another higher layer of the same corporation. And then if they have and see if they have someone available ASAP to travel to this particular local bank location and meet with this potential client for the small business loan. So you already have that level, that layer to overcome. And then once they have the appointment ready and they discuss it during the appointment, that loan official have to get all the documents from this potential applicant and file those and forward those information of the loan applicant to the corresponding loan processing division. That is another either horizontal different level to overcome or different layer to overcome, either way, depending on how the bank is internally structured. Not all banks are the same. They have different structures. And those are the legacy systems. What SoFi is trying to do is to make it seamless. All the different layers, vertical, and all the horizontal divisions talk to each other in real time and seamlessly cooperate and initiate, improve, and monitor the workflow of each loan application for each loan applicant until the process is done. So it is so seamless. All you do is one app, and after 30 seconds, 45 seconds, 60 seconds, you know if your loan has been approved or not. Unlike you walking into a legacy bank, you spend some time to call and make an appointment. Then the appointment may come today, tomorrow, next week, depending, if it is long weekend. Then next week, you meet with a loan processor, they take care of your loan application, and then spend a few hours or 1 day or 2 days to forward it to the loan department to underwrite the loan. And then after these few days, you get a notification from the bank, oh, your business loan has been approved or not. They give you a notification in a few days. And then it will take them maybe 1 more day to fund the loan to your account. SoFi, no. Within an hour, you get the fund. Last time I asked for personal loan from SoFi Technologies, I received the reply. I received the result of my personal loan application within 1 minute time, and then within 2 hours, my account was funded. That quick. I was trying just a few thousands just to see how the system may work. It is really seamless. It is really simple. It is really on the go with the SoFi app. So easy. I don't have to sit down. I don't have to call nobody to make an appointment. I don't have to wait for no time. And I received the result of my loan application within 1 minute. And then within 2 hours, the loan was funded and arrived to my checking account with SoFi. Okay, anyway. Now, this creates a shift or a transformation of legacy system to the current digital system. SoFi, as I have always said, SoFi is like Amazon. Amazon digitalized everything commerce. SoFi digitalized everything finance. Okay, so this shift transformed digital banking from a collection of channels, different channels, both vertical or horizontal, vertical as layers, horizontal as different divisions. So collection of channels into cohesive experience. Conversational AI, agentic AI plays a central role here. What is agentic AI? They are different from the chatbot style AI. Chatbot style AI only give you answers that they think is relevant and correct to your questions. Agentic AI, you ask something, the agentic AI agent, the AI agent takes care of the workflows for you. It initiates everything. Oh, I want to apply for a $10,000 business loan. You talk to the agentic AI, it initiate the process, the loan application process, and then it monitors the workflow, and then it get the result ready and double check everything is correct, and make sure it is done also in legal and private way. So has been no interruption, there has been no breach of information, personal information especially during the process, and then it gives you the result and fund your account for you too, and make sure the fund arrives at your account as well. So this is how they keep track of the workflow for you. So the conversational AI plays a central role here now, interacting naturally with customers across devices while coordinating tasks behind the scenes. It's not just about automation, it's about reimagining the way banks meet evolving customer needs at scale. It's not a small scale. It's not like let's say an electric car company that make only expensive cars with expensive features to showcase their technologies. No, not anymore. It's like a mass market, much lower cost products for mass market. So at scale. For institutions, navigating change management and competitive pressure, this integrated approach delivers faster service, stronger compliance, and deeper customer engagement and satisfaction. So if we are talking about AI disruption, how AI disrupts SoFi Technologies rather than SoFi Technologies is adopting AI and generating unlimited AI solutions for customers like you and me, and how we can seamlessly go with our banking and personal finance on a daily basis with just clicks away through the apps. Or you can go the 90s or early 2000 ways, which is log onto your account in your home, in the comfort of your home, and browse the SoFi Technologies banking website and do your personal finance that way too. All right, so now we have to move forward and then take a look at how digital transformation in banking is done. All right. Now, let's take a look at how the pressure on traditional banking models show us what is going on in the banking industry. The early phase of digital transformation in banking focused on digitalizing individual channels such as mobile banking apps, online forms, and responsive websites. These tools improved accessibility, but the underlying infrastructure often stayed the same. See? Legacy systems, workflows, and inconsistent customer service limited the impact. So it's still underlying the same old legacy way of doing things financially, which create a lot of bottlenecks. Mobile apps became more polished, but core processes like loan servicing or wire transfers remain manual behind the scenes. Contact centers add chat, but the experience varied across phone, email, and web. These fragmented digital services offered convenience at the surface, not transformations at the system level. Today, the goal is different. Banks are moving beyond standalone tools towards integrated, AI-powered digital platforms that enable personalized, efficient, and secure banking services. Modern digital transformation strategies prioritize reworking banking operations end-to-end so services like account onboarding or card disputes are digitalized or digitized, automated, and traceable. See, digitized. How SoFi digitize everything finance is the same way how Amazon digitize everything commerce. Consolidating customer data across systems to create a unified view that supports real-time personalization. Real-time. Not like you have a Bank of America account. Nobody knows what you are up to the minute. They don't even know you're on vacation. Embedding AI to validate transactions, route inquiries, and suggest next steps based on individual behavior. All right, and then let's take a look at the more in-depth situation, how AI can revolutionize banking and personal finance. How AI-powered digital transformations in banking, unlike early digital efforts that simply layered new interfaces on top of legacy systems. AI transforms both the front and back ends of banking operations. It enables faster decision-making, reduce manual workloads, and open the door to deeply personalized services, all essentials for competing in today's fast-moving banking sector. Now, for example, I used to have my Bank of America bank account, and they charge me $25 per month for the checking. I have said it before in my other videos. They are so inefficient. They have so many layers, and there are so much frictions between all the layers of the corporation. For example, just at the retail layer alone, they have thousands of retail locations, and they are not open for business 24/7. They must close and remain closed during the night hours, but they are still paying the rent and the maintenance of the HVAC system, the maintenance of all the electrical system. You have to install routers, you have to buy computers for the employees, you have to hire people to staff the locations, and then employees once in a while go on sick, and you still have to pay for their sick leaves, and employee needs to be paid salaries and compensations. SoFi Technologies vertically integrated, no frictions between layers. They all work seamlessly, and the AI functions of SoFi Technologies automatically initiate workflow, track progress, deliver results autonomously to each customers like you and me. Okay, now let's continue. Number one, automating repetitive tasks across digital channels. AI excels at handling repetitive rule-based tasks that traditionally brought down customer service teams. From balance inquiries to password resets to payment disputes, conversational AI tools like virtual assistants can manage thousands of these interactions simultaneously across digital channels like web, mobile, and voice. This relieves pressures on live agents, shortens response times, and improves the overall customer experience. It also creates consistency. Customers receive accurate 24/7 support whether they engage through a mobile banking app, SMS, or a smart speaker. Secondly, unlocking real-time personalization, right, is very important because they have so much data. What have I been saying about SoFi Technologies? They are a big data company which focuses on personal finance and banking. The most effective digital banking transformation strategies hinge on one thing: using data to serve the individual, not the average Joe. So they know you personally. It's like someone who have known you since you was born. By analyzing patterns in customer behavior and linking those to life cycle milestones, new accounts, big purchases, travel plans, AI makes it possible to offer relevant, timely guidance at scale. Whether it is flagging unusual spending, recommending savings products, or reminding customers of upcoming payments, AI turns raw customer data into meaningful actions, raw data into meaningful actions. This drives loyalty and encourages deeper engagement, especially when combined with a seamless omni-channel experience. Third, orchestrating end-to-end digital journeys. AI also enhances the orchestration of complex multi-step banking services such as loan origination, credit card applications, or know your customer KYC processes. Instead of handing customers off between departments, right, kicking you around, or systems, bank can use AI to monitor each interaction, trigger next step automatically, and escalate only when human judgment is required. So you have all those free banking agents, they can really be free from all the everyday chores and repetitive tasks. Then the bank not only do the banks hire fewer personnel, but the personnel that they still have can really go into great depth to assist each customers in great needs, right? So the customer experience, satisfaction should improve. This eliminates unnecessary friction and ensures the customer journey feels continuous even when the request involves multiple platforms or teams behind the scenes. The result is a more connected, intelligent digital platform that meets expectations for both speed and simplicity. Fourth, enabling smarter, scalable growth. Oh, I love this word, scalable growth. For financial institutions navigating tight margins, workforce constraints, and regulatory pressure, AI provides a path to scale without ballooning operational costs. Rather than hiring more staff or investing in one-off tools, banks can use AI to modernize existing workflows and build a more resilient foundation for the future. When paired with a thoughtful digital transformation strategy, these tools enable commercial banks, credit unions, and other players to deliver high-touch service in a low-touch way, making every interaction faster, smarter, and more relevant. Now, talking about these smaller bank sector players, credit unions, commercial banks, and other players, right? Three banks. Remember how Amazon uses AWS to assist small and medium-sized merchants, right? So if you are a small and medium-sized merchant, you probably do not have that much financial resources to make a whole, well, let me just back it up a little bit, to buy a lot of technology that are at very high costs. You probably don't have the budget for everything. Then Amazon already has vertical integrations of logistics, customer service, the back-end communication channels, and how to build customers and make deliveries, and also take care of the refund process if customers want to make returns of what they have purchased. So Amazon already have all these vertical integrations. You are a small merchant. Time is important. You have a lot of imported goods from all over the world you want to sell on your website or any web channels. All you have to do to simplify your day-to-day payment processes or logistic processes is to just sign up with AWS of Amazon, pay them monthly fee, and you have access to state-of-the-art, one of the world's most advanced, integrated, technologically integrated logistic and back-end transaction processing systems. So the same thing can be said with SoFi. Remember, SoFi has its cloud division, and small, medium banks, credit unions, and thrift banks can also sign up with SoFi cloud system and leverage on SoFi's vertically integrated financial and banking systems to give enhanced, personalized, more cost-effective services to their clients. Am I not right? Right? So there is a lot of parallel, or there are a lot of parallels between SoFi Technologies and Amazon actually. Amazon digitize everything commerce and make it very efficient in the process. And SoFi does the same thing, digitalize everything commerce. Banking and finance, and make it very cost effective, highly efficient systems. So they are the same, they are similar, but they just cater to different industries. One commerce, the other finance and banking. All right, and let's see what is the next one. Let's see how the AI agents are poised to make sophisticated money decisions for customers, reshaping banking and affecting billions of dollars in revenue. Now remember, SoFi has the Cash Coach, the AI agent that help people make real-time decisions how to allocate their money to maximize returns. So for example, you have money sitting in your checking or saving accounts. The Cash Coach can move it temporarily to either a high yield saving account or a high yield ETF, for example, and then it will retrieve the money back to your checking or saving accounts just in time, right before you need to make payments for your credit card, for your rent, for your utility bills, for example. Isn't this nice? So this type of AI agents can do these tasks for you autonomously, which is wonderful. And this is what it is saying here. Hey, TravelBot, book a 7-day itinerary for 2 people direct from San Francisco to Paris with refundable economy flights for under 2,000 and pay with the best credit card based on rewards. Wow. Wow. And then it just does everything for you, right? Agentic AI technologies that can perform tasks and solve issues largely on its own will be able to handle complex requests like the one about shifting AI from reactive helper, such as those chatbot helper, to proactive financial agents for shopping, payments, and investing. These developments are expected to shake up the economic foundations of finance, affecting billions in revenue and posing a threat to business models and revenue at banks, small and medium-sized enterprises, credit card companies, and others. That is why, even now, credit card companies are affected. And one example, MasterCard has just announced a new partnership with SoFi Technologies to use SoFi Technologies' prowess in cryptocurrency and stablecoins to help speed up transactions across the MasterCard networks all over the globe or all over the world. So, which is exciting, right? Pioneers willing to lead the way could see a game-changing upside, while those who don't innovate will lose out. Who don't want to innovate, but can they innovate? Or can they innovate fast enough before their competition eat up all the market shares? For example, if you are Bank of America, if you are Wells Fargo Bank, if you are HSBC Citibank, your back end is still legacy system. At least 50%, 60, 70% is still running on legacy system. So much frictions in between layers. It's like a traditional ICE car company making internal combustion engine, ICE cars. You have the fundamental structure of your production lines all cater to making internal combustion engine powered vehicles. How can you suddenly remove everything which is making profit for you? Completely wipe out everything, make it a clean sheet again, and start all over with having all the equipment shipped to you and reconfigure the production line and how to hire the people who can manage teams, how to manage workflows, how to interact with suppliers. All the ingredients are different. You probably use more batteries, magnets, and everything in between. And so there's a big deal that is going on right now. Most of the legacy bank eventually, most likely, will become specialized personal banking instead of banks for mass market. Why? Because there are individuals who still love to talk to a real person, but not all, right? It's like how people shop online via Amazon website, for example, or Shopify. Do they really want to talk to a real person? No. In their mind, they just want to do it in the comfort of their home, or even in the comfort of their offices. I'm not recommending that, but so it is not necessary to talk to a real person in order to do your personal finance or banking. That is a fact, and that is the trend too. So for the one who really needs to talk to individuals, yeah, there are still those needs, but those banks, Bank of America, Wells Fargo, will gradually shrink more, and become a very specialized bank for people who love to talk to individuals. Maybe some people don't trust machine, right? They do not learn computer science, in their lifetime, so they don't even understand machines. They always think machines are bad. There are people who think that. But anyway, so let's talk about two revenue engines. Credit card and deposits are especially exposed. Both rely heavily on customer inertia and brand familiarity. Right. But Gen Z, Gen X, Gen Y, Gen Alpha, they are more versed in using mobile devices such as iPhone, smartphone, or any other mobile devices such as AI glasses. In the future, we can just talk to the glasses, and then the glasses will do the banking for us. So those inertia, right? Yeah, just like what we have been talking about. Some people still want to talk to a real person, and he has been doing banking with, let's say, Citibank for pretty much all his life. Then he may just want to continue. And for those people, right? For those banks, once those older generation dies, they will pass along their belongings to their inheritance, right? People who inherit, their offsprings, who inherit their son, daughters, inherit their everything. What will those sons and daughters of these individuals do? They will transfer what they inherit in this big bank's account. They will transfer everything gradually to SoFi Technologies, or the banks, the digital banks that they use, right? Who wants to always deal with the old bank legacy system? No, not everybody, especially the young generations. So you may say, for example, Wells Fargo manage, let's say, 1.5 trillion worth of deposits, right, in their accounts, various accounts. But in the future, maybe half of it will eventually got transferred to SoFi Technologies, for example, because whoever inherits whatever is left from their previous generation, the newer generations are very likely to transfer those funds to their own accounts. Why not do bankings in one spot? Why do I have to do my personal finance in different spots? Make sense? More efficient, right? Okay, OpenAI operator mode can already browse the web, make a hotel booking, and carry out multi-step tasks. Startup like Manus AI and tools like Perplexity are pushing even further, working across business platforms, interpreting new intentions and taking action. Google has introduced an AI mode shopping experience that delivers personalized discovery and price tracking via Gemini AI. And that also is part of Resolve AI. Remember RZLV, that stop? Resolve is the name of the company. Resolve AI. REZOLVING. No, REZOLVE. Yeah, Resolve AI. Yeah. Has introduced that AI mode. To facilitate these moves, payments players such as Visa, MasterCard, and PayPal have recently released new capabilities to facilitate agentic commerce, allowing agents to trigger payments autonomously on behalf of users. A simple voice request, "Hey, SafeBot, please maintain my checking account balance at $1,000 and move excess cash to my high-yield saving account and top up from my savings if I dip below 500. Could become routine before long. We may not even have to ask. An AI agent will notice payment or investment opportunities via email, text, or app alert automatically and tell us what it did afterwards." Woohoo! The technologies to make this happen is already here. Griffin has begun building an agentic first banking core for its fintech partners. Maybe SoFi should purchase Griffin. What do you think? But Anthony Noto just have purchased 56,000 shares of SoFi stock. That means, actually what that means, oh yeah, that is good that we are talking about this. What that means is, because of, remember SEC? If you are the high-ranking officials of the bank, you are not supposed to trade internal knowledge, right? So that means if SoFi Technology is about to acquire any company and expect the stock price to go up afterwards because of the acquisition, then the CEO should not be buying the SoFi stock right now. Otherwise, it is internal knowledge trading, right? Which is against the rules of SEC. So that means SoFi is not acquiring any company anytime soon. Okay, so just want to bring this up. Oh, I almost forgot to talk about it. Nice. Financial institutions must prepare now to understand where their value is at risk, which control points will matter, and how they can remain relevant in an agent-mediated role. In this article, we reveal the financial stakes, the disruption agentic AI will cause for deposit institutions, credit card insurers, and others, the opportunities that lie ahead for those willing to innovate, and how institutions can best prepare for the coming agentic banking economy. Watch out for that, people. And SoFi stock, how is it doing today, right? Let's see. What is it now? Let's see. 1886. It looks like every 19. Let's see the last previous days. Oh, it's still below the last high before the current dip. And Anthony Noto bought between here and here on March 2nd. So his average is about $17.88 per share. And let's take a look at 1 month. Oh, it's not going? Is it going? This is 1 month or 6 months? This is 1 month. We are making lower lows. 1946, 1930, 1822, 1776. Lower lows and lower highs. Look, 2135, 1961, 1929, and still today high was 1928 only. So we are also making lower highs, lower lows, lower highs. Okay. And it has been like this since November. Lower highs. See, lower highs 30, 29, 29. And then 21. It is still looping downward. Remember last year, the bottom was in April. And for my 27 years of experience looking at stock markets, from the dot-com bubble, which burst in 2000, and then 2008 and 2010 financial crisis, Lehman Brothers collapsed, and then we have 2020 coronavirus bottom in March, and then last year 2024 bottom in March and April. So this year maybe around late March, early April too. So just in case, if there are some events, unforeseen events, right? For example, there is a sudden increase in prices for oil. For example, I'm not saying it would happen. And then we should expect that inflation will be cost because with higher crude oil prices, um, for example, all those shipping trucks which rely on diesels, they will have to pass those higher diesel costs to the um, to the company who buy the products, who need the shipments, such as Walmart, such as Target, right? In turn, those big and small, medium-sized retailers have to pass on those higher costs to customers like you and me, right? So we should expect inflation to increase, to take up a little bit, could be temporary. We don't know. So it adds another uh, uncertainty to whether the new chairman of the Federal Reserve Bank will see it as more permanent or just temporary. And that is also another uncertainty whether we will see interest rate cuts sooner or later or not at all for this year, you know. So there are a lot of uncertainty. Okay, so normally why it bottoms in March or April? Because a lot of investors, especially the big institutional investors, they want to see the Q1 result of this year first. And Q1 results normally start showing up by late March and early April. And once the big banks and big conglomerates, those big, huge companies make the earning reports, then investors, big or small, can gauge about the current state of the economy, see if people are willing to buy, if the consumers are still opening up their wallets, and how cars are being sold, because cars are big items. If we are selling less amount of cars, fewer cars, then that means people are really tight with their budgets this year. So we will see. We will see. Most likely, I would say by the end of March, we may start to buy little by little in blocks. That's my plan. I haven't purchased any SoFi shares yet, and if it bottoms between 16 and 18, it would still kind of linger around that before going up, right? So we don't have to hurry, and I have huge position with SoFi Technologies already, so I'm not in a big hurry. And there are other companies who are equally, if not more, at big discounts as well compared to their fair market value. Okay, so yeah, in terms of AI is crazy, and all these robots, they run on agentic AI also. Yeah, not just regular AI now, and you can buy this Unit 3 G1 robot from China for under $18,000. It's crazy, even with tariffs. 17,990. Oh my goodness, it's so fun. Of course, you're not gonna get the upgrade magnet or motor with more powerful motor that can spin around more quickly and do all the stunts for you. These are the regular working robots, can help you do chores. And if you are at night after you work, you are alone walking to the parking lot, at least you have a robot to keep your company. And it's scanners and cameras are having 360 views of surrounding, and they are constantly taking videos, right? Improve safety, so which is pretty good. And this Unity go-to dog, I have seen it in here in United States when last time I was in Fisherman's Wharf, and it was walking around, 2,800, not bad. It was 2,500, but it was sold out, and this is the second batch. Now it's 2,800, 300 more. Oh my god, the demand is getting more demand now. So, and then you have the YouTube. If you have seen these robots, this is the same Unity robot. Let's go. Wow. Wow! Oh my. Wow, he doesn't get easy. Drunken Master. Wow, amazing. Wow. That is amazing, isn't it? Okay, guys, thank you for watching. In terms of if you want to buy the dip, in the long run, SoFi Technology will be over $100 per share, $200 per share, $500 per share, $1,000 per share. I know the banking industry, it is very sticky. What other company can have monthly income so stable? For example, I just applied for a personal loan of $5,000, and every month I have to repay that $100+ to SoFi Technologies. So for the next 24 months, it is a very stable income with the interest that I pay for my loan, for my personal loan to SoFi Technologies. What kind of business can have such a good cash flow coming in every month? And it's not just me, but it's more and more now, more than 13 million members for SoFi Technologies. And SoFi Technologies CEO Anthony Noto, remember what he said last year? He is aiming for 50 million members by 2030. And by that time, I have made my calculation. I will show you in the future in my other videos that SoFi should be roughly $700. No, I take that back. I take that back. My calculation was 2030 or 2028. But okay, let me say now, nothing is financial advice, but I remember it was 280 or 300. Yeah, either one by 2030. But it was for my reference only. It's not for you, not necessarily for your reference. You must do your own due diligence. Thank you for watching, guys. Thank you as always. I appreciate your coming and watching my videos. Have a wonderful evening. These robots are cooking. They are cooking. Wow.